Ladies and gentlemen, I would like to welcome you all to the العربية debate organized jointly with the IMF and the G20 at the sidelines of the 2015 IMF spring meetings right here in Washington, D.C. Today, we will be discussing Islamic finance, how to fully unlock the potential that it holds while ensuring at the same time that we maintain global financial stability. Now, Islam has been around for over 1,400 years, but Islamic finance has only been around for a couple of decades. When it first started, this was the Muslim response to the challenges of embracing modernization. Today, it has to be done, of course, within accordance to Islamic law or Sharia. Islamic finance has been growing rapidly in the last couple of years. It's been notching up double-digit annual growth rates. It's not only gaining ground in Muslim countries, not only in Muslim communities around the world, but also Islamic finance has been attracting attention from previously non-traditional sources as well. One particular Islamic financial instrument that has been in the limelight as of late is Islamic bonds, or sukuk. Just last year, we witnessed a wave of first-time sovereign issuers from non-Muslim countries, including the UK, Luxembourg, Hong Kong, and South Africa. And many more are in the pipeline, and there are some finance officials and central bank officials here in the audience who are also planning sukuk in the near-time future. Now, each issuer country has its own reasons for tapping the sukuk market, which we will touch upon in this panel later on. But the increasing proliferation of sukuk, while a boon to Islamic finance, also presents a set of challenges that regulators will have to grapple with. On today's panel, we will address the benefits of growing in financial Islamic sector and how to address those challenges that accompany it, and then take a closer look at the sukuk market, the reasons behind this increasing interest, in particular in the sukuk, and how we could utilize those asset-backed characteristics of this instrument to be used in project finance, and in particular infrastructure investments, which is an asset class by its own right, and we've witnessed rallying cries to embrace investment in infrastructure, whether in the annual meetings back in October or in the G20 Brisbane summit back in November. Now, I'm going to keep my opening remarks short because we have a distinguished panel right here with a wealth of knowledge in their respective relevant fields, and our time is limited, so without further ado, please let me introduce here on my near left, Mr. Pierre Gramegna, the Minister of Finance of Luxembourg. Also, Dr. Zeti Akhtar Aziz, the Governor of Bank of Negara, Malaysia. And Mr. Ali Baabajan, the Deputy Prime Minister of Turkey, followed by Dr. Ahmed Mohammed Ali Al-Madani, the President of the Islamic Development Bank. And on my far left, or on the far left, not in political terms, Mr. Minju, the Deputy Managing Director of the IMF. Welcome all, and thank you for taking the time for being with us today. Mr. Minju, I'm going to start with you because IMF, you're a host as well, so maybe you'll take that advantage. Not only until last year did the IMF take real interest in Islamic finance. What has kindled this interest? Does Islamic finance really matter? Does it pose systemic risks to the global financial stability? What role does the IMF envisage to play in that realm?
Well, thank you. Actually, you have 3 questions. And while we pick up the role of Islamic finance and what is IMF going to do. But before that, I would like to thank Governor Zeti, because Governor Zeti initiated this seminar a year ago. And we carefully follow the suggestions we have this. And also thank Deputy Prime Minister Ali Baabajan for the G20 leadership and to lead on those issues as well. The first issues, I think I'm taking some risk because I sort of disagree with you. The fund did not pick up the whole thing a year ago. We had a long history to work with members and to study the impact of Islamic finance for the members and for the global financial system as well. Because it is very important, as you mentioned, the second issue. We observed the past 7-8 years since 2008, the total assets from Islamic financing institutes increased roughly from 620 billion to 1.7 trillion, almost 3 times. We see the Sukuk issues from 100 billion, and in 2008 today, it's roughly 600 billion, 6 times. And as you say, it's also go abroad now. 1 billion Sukuk issued in Hong Kong, 287 millions issued in Luxembourg and in UK also. So it is really become important international and domestic issues. We found Islamic financing sectors today in more than 10 GCC countries in your region, about 15% the threshold of total assets. So we call it systemic importance institutes. We see Turkey and Indonesia and a few others will soon reach 15% systemic important financial system as well. So it's really important issues. I think this is very clear. And so what we do, I think we work with the members. The first issues try to, for particular countries, when the Islamic finance reach the 15% threshold, become systemic important sectors, we work with members, try to push these Islamic finance issues to their macro agenda.
If we want to talk about Islamic finance and how it changes on the micro level, Dr. Al-Madani, you know, we've seen many individuals underbanked in the developing countries and in Muslim countries as well. We've seen SMEs starved for finance, even in a low interest rate environment. What has Islamic finance done on that front? Has it really changed anything? Because once structural reforms or factors are taken into consideration, Islamic finance seems to have a limited impact on access to finance. What are your thoughts on this?
Yeah, for SMEs, especially for SMEs really, Islamic Development Bank is starting a very, very important role really. Although, of course, there is a number of hindrances in many of the Islamic banks because of the lack of the proper management or the lack of the personnel, but we have very good successful stories, really. We have good stories in Sudan. We have very excellent financing for SMEs. In Bangladesh, we have really also a successful story there. And the Islamic Development Bank is doing its very best in order to enhance SMEs financing, especially we got interest not only actually from our member countries, but from international financing institutions. We received a lot of interest. That's why in the last 2 years, IDB is doing really a very special efforts to enhance financing SMEs through Islamic banking. So we look forward really to cooperate with all international financing institutions and also in our member countries. IDB will be very happy to enhance SMEs financing in member countries and outside member countries.
Mr. Bاباjan, in the wake of the financial crisis in 2008, there was a lot of hopes for Islamic finance. You know, this is the golden chance, this is the golden opportunity to show that, you know, this ethical investment that really shuns excessive speculation taking would be a good opportunity. So in the past 6 years, how can you rate what Islamic finance has done? Has it really lived up to these hopes?
Well, Islamic finance has been growing at quite high rates, not only over the last 5-6 years, but when we look at the very origins and how fast it developed, the growth has been really spectacular. Because the countries or corporations or SMEs which have got into Islamic financial models, they liked the models, and the investors also saw a lot of benefits. I think 2 important aspects here are very important. First of all, for every financial transaction in the Islamic finance, there is a real sector leg of it. So there is something real going on. And on top of that reality, it could be an investment, a trade, a commodity, whatever, there is financing. There is one-on-one linkage in between. That is important. And the other important aspect is risk sharing, so that when things are based on equity and assets, then in times of volatility, this happens to be a less risky kind of investment from the investor's point of view.
We will definitely come back on infrastructure sukuk and what Turkey's plans are for this year's presidency of the G20. But let's take the point of view of the regulators. Dr. Zeti, Mr. Ali Baabajan is saying it is compatible. But in the wake of the financial crisis, there were calls at Islamic finance, to come and prove itself as an alternative. Is it fair to ask Islamic finance to be an alternative to conventional finance, or should we just stay in the realm of compatibility?
Well, Islamic finance has all the elements that the discussion post-global financial crisis is looking at. They do not want to see a disconnect between finance and the economy. And one of the fundamental issue that was mentioned, all financial transactions are supported by an underlying economic transaction. Therefore, as the finance expands with the economy, so there's no disconnect. Secondly, it's based on profit sharing and therefore risk sharing. So risk management is directly embedded in Islamic finance. And as a result, the risk management, the transparency and disclosure within the contracts of this risk sharing is all very explicit. So in other words, everything you want relating to risk management, governance and transparency are directly embedded in Islamic finance. Therefore, it is a form of financial intermediation that is highly attractive in this kind of environment. But in looking at this, of course, and it demonstrated its resilience during this global financial crisis. But that's not to say that it is immune. Eventually, if economies slow down and markets correct, it will have some effect on Islamic finance. But the central banks, 10 central banks, together with the Islamic Development Bank, came together to establish the Islamic Financial Services Board, which is the entity that aspires to be similar to the BIS that issues prudential standards. So already there has been in place IOFI that creates the accounting standards, and this entity established in 2002 issues the prudential standards. And we are not doing this in parallel, but together with the existing regulatory multilateral agencies, because we are participating in their process and they are participating in our working groups and so on to establish these standards that will be applied to ensure that financial stability will always be preserved.
Well, very important, definitely an important factor for any regulator. But let's ask Mr. Pierre, what has attracted Luxembourg to Islamic finance? It's a major domicile for mutual funds, Islamic as well. Why go through that or to that small niche market?
Well, first of all, I would like to say that it's been a wonderful experience to launch the very first sovereign sukuk denominated in euro last fall, and it was very well received by all the markets, and so it showed that it is definitely an interesting niche, but I think that the word niche here is probably an understatement. It is already much more than a niche. And so we did it for many reasons. One was we wanted to diversify the activities of our financial center, and second, to innovate, which is obvious. But it's not so easy to innovate in this field because there's many issues that we're going to discuss today that make Islamic financing not so easy, more complex than normal financing. But we had accumulated quite some experience over time because, for example, we have been listing the first sukuks or the first Islamic bonds at our Luxembourg Stock Exchange. Or, for example, the Luxembourg Central Bank has been the first European Central Bank to be part of the Islamic Finance Services Board, the IFSB, which obviously gives you some knowledge. And you need to accumulate a lot of knowledge if you want to launch such a project. So these were the core issues. You can add to that it helps you also diversify your debt structure by adding a kind of bond that's different from the traditional one. It is asset-based, so investors like it. And it has also a kind of ethical aspect to it, which has not yet been underlined, but which is obvious when you listen to what Mrs. Zetti has said about the fact that there is always a connection between a real economic activity and these loans. And that, I think, is something in today's world, after the world economic crisis, is becoming more and more important. In the end, you could phrase it this way, and it just comes to me while we're discussing here. In fact, Islamic finance in general, or sukuk, is a kind of bridge between the traditional finance culture that we have and the Islamic culture. And it is good that we can bring these two worlds together. So this goes far beyond just talking about financing, but I think this element, we should keep it in mind. And last but not least, I would like to say that I'm keen to work together with the IMF also in the future to develop additional know-how, and I'm very pleased that the IMF has launched such an initiative to know more about it and to gather us here together.
Zetti, one of the Islamic banking's main weaknesses in particular is the industry's lack of high-quality liquid assets. From a regulatory standpoint, what could be done to address this?
What is very important is that where Islamic finance is operating, and I should mention that there are now more than 40 countries with established financial institutions that are operating. But I should say that there are more than 90 countries that are participating in Islamic finance, while they don't have Islamic financial institutions, but their corporates and their financial institutions are participating and investing in Islamic financial assets. What is the issue that is very important for all those with established financial institutions is to develop a domestic money market. And the central bank in Malaysia, for example, issues such short-term instruments that will facilitate money market operations to manage liquidity in the Islamic financial system. And that is the first step. But as we know that Islamic finance involves multi-currency business and cross-border financial flows. And to address this issue of short-term, the lack of short-term instruments, as recognized as important for it to facilitate such cross-border multi-currency business in Islamic finance management.
But in the first quarter of this year, there was a major drop in issuance from the Central Bank of Malaysia, correct me if I'm wrong, which decided to switch to other instruments of liquidity management rather than sukuk. What was the reason behind this?
Well, that was in response to the kind of volatility that we are seeing when we have short-term inflows as a result of this quantitative easing, massive quantitative easing that is taking place. one of the first assets that they purchase is the central bank paper, seen as high quality short-term papers. But also our government sovereign issuance, 40% of it is held by non-resident. But because they represent attractive yield, the first that is disposed of when there's a reversal of the flows is the short-term papers. So to reduce this volatility, we actually reduce the issuance.
Okay.
Can I add one thing? This is
Please.
the real issue Dr. Zadi mentions. Given the long-term nature of Sukuk, provide the liquidity constantly in the standard base to Islamic finance is a key. So we need to bring them into the general monetary policy framework, bring them to the money market, bring them to the bonds market. And I think this is very important. So for central bank, for the regulator, for the macro policy makers have to understand the nature of this business, bring these things into the policy agendas. Now, there's a real situation because the ample liquidity in the global money market and they move into the different countries, purchase for the safe assets. So there's a clearly need a special window for this Islamic finance to be able to get a liquidity, short liquidity. Because obviously there's a shortage on the safe assets, particularly on the central bank papers. I think this is very important. This is the reason Malaysia Central Bank responds to this situation. But I just want to emphasize we need to bring this into more systemic frameworks. And also, when you're looking into the current, the short-term challenges, ensure the whole system, particularly in the countries Islamic finance reached the, we call the systemic important thresholds, be able to provide the proper liquidity for those institutes.
I would like to ask Pierre, what were the key success factors behind your sovereign sukuk issuance? And do you think that the lack of liquidity of sukuk or lack of liquidity in sukuk markets can discourage institutional investors to actually participate?
Well, there are many questions in what you just mentioned. Let me just, in telegraphic style, say that the sukuk was successful because I think we are a AAA country. Second, because it was the first issuance in euro. And third, because there's a lack of Islamic financing out there. So when there's a lack, obviously, there's a lot of demand. Yeah. I think that the low interest rates, which have not yet been mentioned, are not making things easier, neither in traditional financing nor in Islamic financing. This being said, the question about the liquidity, let me say a few things here. We are confronted, I think, with a trend that is relatively new. What I mean by new is that non-Islamic countries are getting interested in Islamic finance is a very new phenomenon. And so it must also be looked at in such a way and maybe not try now to solve all the problems that are being raised immediately because we will not be able to do that. If I make a parallel with the Eurobonds that started at the beginning of the 60s, and our country was very much involved in that, well, it also started with the absence of a general framework. And then gradually a framework was developed. So we should be ambitious, but at the same time give ourselves different steps in order to reach the goal that we want to reach. And I agree with Ali Baba-Chan when he says that it is the sovereign sukuk that should be the trendsetters. They are, in fact, the ones who are setting the trend. That's correct. And that corporates will then follow. So that is true. There is a lack of short-term instrument. That is true. But for the time being, the absence of such or the lack of such instruments is not so much felt because most institutional investors can very well live with the medium-term instruments that are being proposed. The last remark I would like to say is that I think that the liquidity issue is very much impacted by the fact that we have a lack or absence of standardization of what an Islamic instrument, Islamic product is. And because it is varying from one country to another, it makes the liquidity issue also very difficult. So I think liquidity and standardization need to be looked at in parallel, and I even wonder, and we'll talk probably about that later, that if the standardization issue shouldn't even be taken first, because but it's a chicken and egg question. I don't have the answer, but definitely it's a subject that deserves to be looked at.
Well, hold your thoughts on that point. Very interesting point. Let's take a short break, and maybe you can have a sip of water. So, ladies and gentlemen, we're just going to have a short break, a commercial break, and then we'll come back. Ladies and gentlemen, welcome back to the العربية debate on Islamic finance, jointly organized with the IMF and the G20. We were just discussing a very interesting point about which should come first, addressing liquidity or addressing standardization. Let me put that question to the first person who rose his hand, Dr. Ali Madani, and maybe we come back to the governor, Dr. Zati.
Because this is really the real challenges facing the industry. I did speak before about the liquidity management, and the other challenge is standardization or having reference to the industry. And really, we are working on that. We are cooperating with the Fiqh Academy of the OIC. We are cooperating with the IFSB. We are cooperating with IUFI. We are cooperating with the Board of Islamic Banks in order really to find a solution for that. So we are working hard on that. If we did solve these two issues, the problem of how to manage liquidity in a professional way in the industry, and the other challenge to have the reference for standardization, for that, inshallah, the industry will really be very globally accepted, and it will be a big contribution to the international financing order.
Dr. Zati, which comes first, like Mr. Pierre just said, the chicken or the egg, or they come in tandem?
Our experience in the 3 years that it took to conceptualize establishing the IILM, the International Islamic Liquidity Management Corporation, was that we had to have a structure that was accepted of the instrument that could be traded in all jurisdictions and that was accepted. And therefore, it went through many Sharia approval process in all the respective jurisdictions. That was challenging, but there were consensus that allowed us to have a structure that was internationally accepted. And then secondly, to have this instrument that could be highly traded. So in other words, this was standardization. And related to that was that it could be eligible for regulatory treatment. That means the central banks in the respective jurisdictions recognize this as a liquid instrument that was, for example, eligible for collateral in the event of requirement of liquidity by the Islamic financial institution. So this is the progress that we have achieved so far. It was a challenging process, but we have made significant strides on this front.
Let's just give me 1 second, Mr. Minju, but let's a little bit talk about the sustainability of this demand for sukuk. We see countries, one-time issuers may be coming down with a sukuk issuance which is 2, 3, 4, 5 times oversubscribed, but that really doesn't go down maybe because of what the issuer is, but maybe because this is such a huge demand out there. So how sustainable is this demand, do you think, Mr. Ali Baabajan?
Well, looking at the growth of Islamic finance industry overall, globally, I think we have lots of reasons to be very, very optimistic about the demand. And the more credibility and trust built into Islamic financial instruments, and the more countries have stronger legal frameworks to support Islamic finance, the more demand will definitely be there. And when we look at the issuers and also the investors, actually there are two broad groups we can talk about. On the issuer side, we would have issuers who would be more Sharia conscious, let's say. They are more sensitive about the Islamic rules. But also there could be issuers who don't really have the sensitivity on that side, but for purely financial reasons,
needs, yes.
they can find it useful. On the investor side, we see the same two groups, so to say. And I would accept both of the groups to grow larger on both sides of the market. So the issuers would be more Islamically sensitive and or maybe non-sensitive, but also on the investor side, we would see both groups grow. And also I think it is important to look at this from the inclusiveness point of view, because in many Islamic countries there are mass populations, wide segments of the society who are very sensitive about the Islamic rules, so to say, but they are somehow outside the system just because of the lack of options or lack of Islamically compliant instruments. And I think the more widely accepted, implemented and distributed the financial instruments are, the more and wider segments of the society will be included in the system. And financial inclusion is actually one of the global agenda items that we are dealing with at G20 and also in other international platforms. And if we are talking about inclusion, then there is still a lot of distance to be taken, untapped market, so to say, on the investor side, especially when we look at the retail part of the sector.
Mr.
In addition to the legal framework, I just did want to mention one other, the rating process as well needs to be strengthened. And right now, that is an area that still needs to be strengthened so that it gives the standing of the issuances.
You're talking about the credit ratings?
Credit ratings.
Issuances,
yes.
Okay. All right. Mr. Pierre, I would like to ask you about the problem that we have with the sukuks is that they are traded OTC, over the counter usually, and they don't really list on exchanges. At Luxembourg, you have 3 sukuks, correct me if I'm wrong, that are listed there. Luxembourg's issuance, the Pakistani issuance, and a third one, if I'm not mistaken, South Africa, correct? So how can you enhance listing? Because if we can list them on the exchanges, then we can partly address the issue of liquidity as well.
Yes, you're completely right. In fact, we are, because we have a stock exchange, encouraging the actors to list the sukuks. You must realize that for sovereign sukuk, the listing is not absolutely necessary, but it gives an additional flexibility, which is welcome. But if we want to really have liquidity, we must make sure that corporations use the stock exchange. And that's their natural market. That's what companies do in everyday life, in traditional finance, and that they should and could do. And there is not impediment, to my knowledge, there is no impediment for the time being to do so. In fact, we are listing, I think at our stock exchange, more than a dozen private ones, which from very famous name, which I don't want to mention now right here. So that possibility exists. But nevertheless, I would like to come back to the fact that issuing such bonds is more expensive than going for traditional finance, and one must be aware of that. And so how can we reduce those costs that are inherent to Islamic finance, because you have to set up
structure,
special structures.
yeah.
I mean, we've gone through that in Luxembourg to do the sukuk. Obviously, we were very determined to do that. But we must make sure that these costs be reduced. And we can only reduce them in one way, I think, and that is to have standardization. To have, for example, something like a prospectus, like you have traditionally if you issue bonds, we should have a kind of framework of prospectus, a kind of benchmark that those who want to start in this field can refer to that and know this is how it works. I don't have to reinvent the wheel. There's other things that you should do, and that is to see if you really want to make Islamic finance an instrument that is used widely, then the connection, but this is my personal opinion, and I'm not sitting in a Sharia board myself, you must decide, or the IILM Corporation must decide, or together all the main actors have to decide how far you want to go in the connection between the asset that lies in the sukuk and the instrument. And if you define it in a very, very strict way, it has to be a building that you see, or a road, or a bridge. Well, obviously, then we have 100% connection. That's fine. We have zero leverage. That's fine. Do we want to have the cursor there, or do we want to have it a little bit further by having more sophisticated connections to something which maybe you cannot touch, but which is a real asset? I think that is a key question. That's why I was saying that the liquidity issue and the standardization issues are definitely connected. And I'm definitely very keen to look more into the short-term instruments that Mrs. Sethi was talking about and that have been developed, because I think this is the right path. And I'm encouraged to hear that there is a consensus on these instruments. So there, part of the job has been done. Let's try to enlarge that circle.
Dr. Sethi, how far do we want to go? This is a very good question, really. And how far do you want to go between the relationship between the instrument and the asset? And can we really, when we're talking about standardization, have this standardization where we have very differing opinions between the ulama and the Sharia scholars about what is permissible and what is not permissible? And maybe the wheel won't turn that fast because of that dilemma there.
Yes, that is true, but we have the platforms already for this engagement to take place, and there's already a convergence in consensus. I'm told between 80 to 90% of the issues have been resolved already, and Sharia boards all around the world from different jurisdictions participate in this. And then there's a repository of Sharia rulings that can be shared, that explain the foundation and rationale and the process to arrive at these various rulings. So I do believe that it has happened. And of course, innovation has been very dynamic also. So in other words, you have the underlying real asset, you have future income stream also that is taken into account, and so on. So they are highly innovative structures, and we have seen the demand for them from the global international capital market has been overwhelming, actually. But I do want to mention, in terms of sovereign sukuk, because of our market having the framework and the prospectus and the rating and so on, that we've had issuance from Europe, from an oil and gas corporation, from a non-Islamic country. We've had a financial group in Japan, for example, quite recently also make an issuance, and from the UK and so on. And these are private multinational corporations undertaking these issuance, and they have been very successful. So I think that the potential is tremendous.
Okay, we're closing in, we're running short on time, so I really want you to try and make your answers concise to touch upon a number of points. Mr. Ali Baabajan, we're saying that Luxembourg and other cities around the world are trying to position themselves as Islamic finance hubs, and these are countries or hubs that are outside the Muslim countries that are vying for that Islamic liquidity that has no place to go or limited places to go. Do you worry that this Islamic liquidity will soon migrate outside the Muslim region or Muslim countries and will not be invested in the region? So is there a lost chance, do you think?
Well, I think for this question, I have to just talk about my personal opinion and how we look at the subjects. First of all, Islam is not in the monopoly of any single country or group of countries. It is a universal religion. That is maybe one point. Another point is Islamic financial techniques are now universally accepted and embraced financial techniques. So when we look at from both perspectives, I think having it in a global sense and looking at this in with a very open mind and view is important. So when we first learned that British government was interested in it, and also London as a financial center was interested, we were happy. Likewise for Luxembourg, I think it's very, very encouraging. And also, as now in my position as the G20 chair, also we are very happy because we have been emphasizing equity-based financing. We have been emphasizing asset-based financing. We have founded FSB, the Financial Stability Board, for global standards for financial regulation. And Islamic financing techniques versus what we have been working on G20 is so overlapping, and having this in a global perspective, I think, just only helps. Well, maybe just a few details of what we have done in Turkey when we first started introducing the Islamic financial techniques. First of all, we didn't use the word Islam in any kind of our legal framework. For banking, for example, we used participative banking or participation banks. And for sukuk, we used the term rent certificate. And we draw our legal framework as wide as possible to allow different opinions and different Sharia board rulings, so to say, to fit in our wide legal framework. Because at the end of the day, especially the Sharia compliance changes from one Sharia board to another, and the instruments that we produce as the government or the instruments that our corporates issue is highly market-oriented or customer-oriented, so to say. Whatever the interest of the investor is for that specific issue, the Treasury or the corporates could work out different ways of instruments to meet the demand of the investors at the end of the day.
Mr. Minju, is Islamic finance a great fit for infrastructure investments, and how can developing countries really utilize that?
It is. And as the video showed, the world for infrastructure investments is huge, right? And obviously, the supplies haven't catch up yet. So Islamic finance, particularly specialized on infrastructure finance, is very much welcome. And we can see in the near futures, this function for Islamic finance will grow even farther and stronger because demand for the infrastructure investments is there.
Mr. Ali Madani, we have to touch upon some of the current issues right now. GCC issuers are very important issuers of sovereign sukuk and sukuk in general, but now we have the fall in oil prices by over 50%. We have the imminent interest rate hike by the US. How is that going to affect GCC sukuk issuance, you think?
Of course, I think in the short time it will not affect much because they have assets. So it doesn't affect so much. But our member countries who are importing oil, of course, they are affected positively They have more cash for development. They have more savings. I think that element will increase Islamic banking in those member countries who are importing oil. But in the long term, if you take the long term, of course, it will be affected because this will affect the whole economy, will come down. This will affect both member countries who are exporting and member countries who are importing the oil. But as a whole, I think, as I mentioned before, when Islamic banks and Islamic sukuk is tied to projects, I think it will flourish because as it is tied with the real economy, and as you know, we have a lot of member countries who are, the rate of growth is very high, especially in African countries. So there is great need for financing for infrastructure projects. And I think sukuk will be the answer for the future. So I am confident that Islamic banking is going to grow because of the high growth of member countries, especially in Africa. And if sukuk is going to address this need for project financing, we're having now a number of preliminary studies on this matter, and I think this will help the Islamic banking to grow in spite of the low price for oil.
Okay, I just have time for one more question, then we're going to open the floor for the audience. Dr. Zeti, the final question is for you. If project-based sukuks are such an ideal fit for infrastructure financing, why haven't we seen more of such issuances? Because most of the issuances that we've seen have been for mid-sized projects on a medium tenor.
There has been lack of awareness of the potential. Actually, yesterday, Malaysia issued a 30-year issuance, and it was oversubscribed. Of course, it was the 30-year tranche was only 500 million US, but it was oversubscribed by 6 times. So there's an immense demand, and so it was the first time even for us to go to the international market to do that. But in our own jurisdiction, we have done a few times a 30-year issuance, which was oversubscribed. So I think there's a lack of awareness of the potential to doing that. And I believe that as more issuance come out, especially if supported by sovereign and undertaken by sovereign, this will create the market in the different maturity.
Well, ladies and gentlemen, we just reached our time limit, so I would like to thank you all, the viewers and the audience, for being here at the Al-Arabiyya debate, and I would like to thank all the panelists. Again, Mr. Pierre Gramegna, the Finance Minister of Luxembourg, Dr. Zeti Akhtar-Aziz, the Governor of the Bank of Negara, Malaysia, and Mr. Ali Baabajan, the Deputy Prime Minister of Turkey, and Dr. Ahmed Mohammed Ali Al-Madani, the President of the IDB, and last but not least, Mr. Minju, the Deputy Managing Director of the IMF, at my far left. Thank you very much, ladies and gentlemen. Goodbye.